right, so what if I told you the banking system is designed to keep you broke, while the more rich and the affluent play an entirely different set of rules, kind of like we're playing checkers and they're playing chess. And no, this isn't some conspiracy theory like some Democratic Republican type thing. It's just math. And today I'm going to show you how to beat those people at their own game. So now let me say this. If you're a business owner, investor, high income earner, you've probably felt frustrated with how banks and financial people just in general control your money. You're the one making it, but they're the ones that control it. But what if I could flip the script, and what if you could become the bank? Now, this is a crazy thought because banking is such a huge industry. Not so much wearing a suit and proving loans, but you can do all that for yourself. So let's talk about the problem. So right now, banks are using your money to get rich. Now, here's how they do it. You deposit your hard-earned money in the bank, and they turn around and they loan that money out 10 times the interest rate they pay you. So let's just take for an example, they give you 0.5%, they're going to loan it out at 7, 8, 9%. Okay. So here's the question. How do I take control? It's a strategy that allows you to earn uninterrupted compounding interests, access your cash at any time, and finance anything without asking anybody's permission. It's a thing called infinite banking. So let me just go into an example and tell a story. So there's a story of a guy that's a house flipper, okay? He was using money from what they call a hard money lender, okay? And that rate is anywhere between 12 and 15%. And the reason I know that is because I do hard money loans for people all the time. So let's just use his example. So say he was doing 7 houses a year and he was borrowing about $150,000 a piece. That equals up to about $1 million. So what he does, he borrows $150,000. He pays about 15% interest on that money every time. So he borrows that money, pays that interest, but then he's also making money on the profit. He's just using that hard money. Now, let me stop this for a second. Why is he using hard money loans? Because it's fast and it's very, very easy, and the hard money lender holds the note, meaning the mortgage for that house. So it's really safe for both parties. Now, the thing is house flippers love speed. They find a deal, they want to buy the deal fast, and they want to turn it fast. So their whole thing is speed. So what he's doing is if he borrows about $1 million over the course of a year, so 7 houses times $150,000 each, it's a little over $1 million. That's about $150,000 in interest that he's paying. So let me tell you what he did. He took out a $50,000 infinite banking policy. So in year 1, he had access to about $30,000. Okay, so what he would do is on some of these loans, he would take instead of borrowing $150,000, he'd borrow $120,000 and use his $30,000. Okay, that cut down the interest a little bit that he was having to pay that hard money lender. So let's go to year 2. In year 2, he has about $80,000 in cash and his cash value. Instead of borrowing $150,000, he would borrow about, 70, okay? So he'd borrow 70 and then have his cash value with the $80,000 do that. So he's doing both, but he's cutting back on the interest. In year 3, he's got about $130K of cash value. And every time he sells the house, he replenishes his cash value in his infinite banking account, and he pays back his hard money lender. So every year, he's paying less and less and less and less in interest to the hard money lender. So let's go to year 4. He's about $180,000 in year 4 in his cash value. In year 5, he's at $230,000. And if you've got $230,000 and you're doing 7 houses a year at about $150,000, you're not having to borrow much money at all. So what has he done? He has, in essence, taken the hard money lender almost out of the picture totally, and he's recapturing all that interest. So let me ask you a question. Would $150,000 a year be significant to you? The $150,000 was just the cost of doing business for him. But what he did is he still did what he did, but he recaptured and was the bank for that business. He recaptured that $150,000. What if you recaptured a lot of the interest that you were paying to banks, whether it is at least heavy equipment, you're a landscape guy and you got to buy equipment all the time, or you're in food and you have to buy. What could you do? What could you do with an extra $150,000 a year? That's the question. Your money keeps growing in these accounts even when you borrow against it. So at a cash value of $230,000, say he pulls out $100,000, the cash value is still growing at the $230,000 rate. That's crazy. I know it's crazy, but it's awesome. So he didn't have to have the banks. The banks are not controlling his financial future. He is in control of all of that. Okay. Now here's the key. The wealthy have been using this for decades, and you can too. Now I know what you're thinking. This sounds too good to be true. But in my next video, I'm going to show you exactly how this works. Step by step, you'll see why waiting even one more year could cost you hundreds of thousands of dollars in lost wealth. Do me a favor, watch the next video. This is where everything's going to click.